I'm Ashton from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Craig Cobb from TraderCobb.com. Craig, thanks so much for being on the show. Is it a pleasure to have you here once again? It's been a while.
Yeah, mate. Thank you. Absolute pleasure to be here. Thanks, Ashton.
Yeah, I'm excited to follow up. It's been about a year since you were last on the show. If you could give a little bit of background for the people that didn't see the show last time. I know you've been in traditional finance for, trading for like 13 years or so, but more recently into crypto. If you could give your story on why did you get into crypto and why do you prefer crypto trading?
Yeah, sure. I've been trading since, for the last, it's actually November now, which is when I started. So it's about 14 years now. I've been investing in markets since I was 16. So I've been pretty active for a very long time. It was introduced to Bitcoin in 2013. At the time, I was trading mostly foreign exchange, bonds, commodities, equities, that sort of thing. Pretty much anything that moved because I'm a technical trader and I work from checklists. My personality is quite spontaneous. I like to have a good time. That doesn't work in the markets because, you need to be cool, calm and collected. And I've created some checklist-based trading strategies that, because of technical analysis, when I was introduced to Bitcoin once again, or crypto assets in 2017, July of 2017, I bought some Bitcoin and started charting it and away we went. And I really honestly, 2 years of doing this and educating people and having the Trader Cobb Crypto Show and being heavily involved in the space, traveling all over the world and whatnot, I haven't looked back because it's the most volatile market in the world. Sure, some of the order systems aren't as easy to use and accessible as what other markets are, but we're getting there and we're at the beginning of something I think that is perhaps like r.com. I was too young to trade or invest around the .com boom, so this I think is our opportunity now to have that same thing. So that's why I do it and that's why I love it.
That's great, and it's definitely a great opportunity. And you're balancing a lot. You're not just trading. You're producing content every day. You have your own show. You have trading groups. You're doing events, and you're traveling around. How are you managing all of this at the same time? And what do you do to keep calm?
Yeah, I do actually do Wim Hof breath work and ice baths, believe it or not. A lot of the last 3 months have been hectic. We've completed a national tour, so taking the classroom courses around Australia, and in London, Singapore, and Malta. So we've done quite a lot of travel of late. Was also, back to back with interviews while we were overseas. So the good thing is now that I'm back, I've got interviews going out for plenty of time now. There's a lot of time now that I don't need to be conducting too many interviews, but it's it is full on, and you do need to have something every day at 1 o'clock Sydney time. In my office here, I'll be on the floor doing my Wim Hof breath work to basically just calm everything down again and be ready for the markets. But when I'm traveling, I don't trade. So yeah. I've really missed the markets of the last couple of months. I haven't been as active as I would like. I don't trade when I'm not feeling well or feeling up to it. And it is good to be back. There is no place like home, as Dorothy said.
Definitely good to be back. And when you were last on the show, we talked about the gaps between traditional finance and crypto finance and the potential reasons why traditional investors might not want to jump in. Some of them being the liquidity and the trading tools are not the same. And that was at the beginning of 2019. Has anything changed since the whole year, or are we still sort of, there's not enough liquidity, we still need more tools?
Yes and no. There have been some new tools that have come in, but they've been from the wrong players, and the right tools that have come, or the effort from the right players that have the liquidity have not been very good. I was fortunate enough to interview CZ a couple of weeks back. I expressed my frustration with the ordering systems that they have there at Binance. It's too complex. It's not a difficult thing for them to do, but they don't know what they're doing. I really don't understand. No offense to Binance people. This is just a fact. I'll stand behind that till the end of time. It's clear you don't know what you're doing because it's not done properly. Why someone hasn't gone out there and just copied what the traditional market players do, I really don't know. I have theories around that. Just too much money too quick and no idea as to what traders actually want. But they've got to hurry up because if they don't do it, the next time we see a bull run, You've got the big players out there in traditional markets that are 5.5 days a week trading. They've got Bitcoin, they've got Ethereum, they've got a fairly decent little puddle of opportunities to trade. They just don't trade 7 days a week. Next time that bull kicks in, if it kicks in, I mean, it might not, who knows? If we do get a strong bull market again, they're just going to dominate, because I'm going to put my money with them, because it's safe. It's under my government guarantee here in Australia up to $200,000, and they're regulated. It's got everything I want. So if they don't pull their finger out, they're going to miss out.
That's very interesting to hear. I've actually never heard that before about their order books being off, but obviously I'm not from traditional finance, so that's really interesting. And that leads me to the next question about Binance, is that over 2019, they've released a lot of other tools. You mentioned there was a lack of investment tools, but it seems like Binance is adding in not just trading, but margins, futures, lending, staking. Do you think they're going in the right direction on that part, adding in more tools?
Yeah, absolutely. I mean, there's no doubt in my mind they're going in a direction, which means they're trying. If you're going from A to B and you're doing it in the car, you hope to keep the front of the car in front of you. But if you're spinning the whole way, you're out of control. You still make it from A to B. Well, it's not a very comfortable ride. And I think the car's spinning a little bit at the moment. Certainly, their margin platform is not easy. Their lending platform, I haven't tried that, to be fair, so I can't really comment on that. They're definitely bringing in new products. I just think they need some consulting as to what traders want. I don't want what Binance has. I find it extraordinarily frustrating that, right now I've got an order in for a long trade just on the spot price, so no margin involved in this one at all, and I can't have a stop loss linked to that order. So I have to be here, keeping an eye on my charts at the same time speaking with you. And essentially, if I do get filled, then I've got to go and click my order to put my stop loss in. Now, that is just very, very, it's like building a fire with sticks when you've got a lighter in your hand. It really is not very good at all. They're trying, but I would suggest to Binance that they get some proper trading consultants in there to set things up, because I know they can do it.
That's really interesting, and as we'll see, as more tools come out that traditional investors are used to, they'll definitely see the contrast. And there is a lot of people on Binance that are first-time traders. They got into crypto because they were excited about it, and they don't know about the traditional markets, so they don't know how good they could have it. And speaking of traditional tools, in September, the backed futures were released, and this was highly anticipated by the crypto community. Did you see that as a big stepping stone towards institutional interest driving into crypto, or how do you see that playing out?
Yeah, absolutely, mate. I mean, the CME was the first one, of course. The CME came out and they had their futures. Backed is the second into the place. I don't know why there was such a big thing about backed. I'm not quite sure why. I think it's just, and no offense to anybody in the space, just maybe a lack of understanding, a lack of education around how things sort of work, and they snowball. They don't, to think that backed opening its front doors and then all the institutional money was going to pile in hand over fist with this huge bidding war was totally unrealistic. These things take time. And, the easiest way to look at institutional inflow is to see the futures being traded. Now, people need to understand what a futures contract does and what it facilitates for a fund in traditional finance. A futures contract is there for traders, right? It's also there for hedging. So if I'm going to go and have a large position on, say, gold, right, and I'm long gold, then I need to have a tool that allows me to mitigate that risk relatively quickly, as a financial institution can't just go straight back to cash. They've got to hold a certain amount of their portfolio in the market. Otherwise, obviously, markets wouldn't exist, because they just sell and we go back to cash, and it would just be too volatile. So a derivative allows people to operate within a market space from an investment point of view, as well as from a speculative point of view from a trader. The sooner the backed launch, the sooner the CME launch, the sooner we start to see these volumes increase, and we have seen the volumes increase quite significantly since both of these contracts launched. What that's telling me is that there's more institutional players coming into the space. Now, we're not going to be able to see exactly what they're buying, i.e. Bitcoin, because they'd be mad if they didn't do it OTC. Same with Ethereum, whatever else. They're doing equity deals, that sort of thing, VCs, all this sort of thing will be traditional finance rules, right? But a very, very easy indication of what's going on is to just see the volume in these contracts. The futures contracts, it allows people, bigger investors, to come into the space. It's as simple as that.
And speaking of volumes, it seems that a lot of people claim, and part of the reason why some of the other futures were rejected was that the amount of fake volume is upwards of 90% or some really high amount. Is that possible to replicate that same fake volume with these derivative exchanges, or because it's actually on the regular stock market, it's not quite the same?
Look, I mean, I don't know. I mean, I'm not certainly suggesting that traditional finance doesn't have its flaws and faults and fakes and all those sorts of things, because it does. I mean, we see it all the time. We see some of the biggest banks getting in trouble for fraud. Look at HSBC with the money laundering. We've had one here recently in Australia doing the same thing. I mean, Deutsche Bank's in big trouble. Look at the lending practices of 2016, 17, 6, 7, and all the years leading up to the GFC. Look at what we're doing now. Right now, we've got even more debt. We haven't solved anything. It's still the same, just Control C, Control V, repeat cycle that doesn't seem to be achieving a great deal, but a lot of people making a lot of money. I'm very interested to see what happens next. But there's certainly a lot more to be said from a market that is regulated under very strict laws. It's got the spotlight on it. I would certainly be trusting the volume coming out of the CME or backed, as opposed to your crypto exchanges.
Mm-hmm. And now, besides Binance updating their order books, what do you see, or what would you like as additional derivative tools or other financial tools to bring more institutional investors into crypto and to bring more capital into crypto?
Oh, look, I think the easiest thing for retail as well as institutional is just to make it easier. Institutions will come and play as retail picks up as well. I mean, they want to be building their positions now. They're already there. They're doing their thing. I think one of the most positive things that the space can do for itself is to have something as simple as an entry link with a stop. Now, if I say I want to have 5,000 contracts there, and I haven't got I'm a normal, dabbler type trader type person, right? You haven't got access to all my risk calculators and all that sort of stuff that I've had to get built in place of not having anything there in the space. You want to be able to see, with that size position, what's my actual exposure? How many Bitcoin? How many Ethereum? How much dollars is that going to be a loss if my stop loss gets hit? It's a simple calculation. It's a simple order system. And I don't even care if they don't put targets in. Just give me a stop loss with a managed amount that shows me what I'm actually risking. It will give the exchanges far more volume. Far more volume will increase far more interest. Far more interest means that we see prices increase. Prices increase, we get back in the press comes in, and we all get what we need, which is a much more bullish sentiment and faster growth within the sector. I'm a speculator when it comes to price. I'm an investor when it comes to business. So from my point of view, the investment goes on now. The building of the companies goes on now. Payoff comes later. But as a speculator, it's and someone who runs businesses in the space, it's much easier doing business when the market is a lot more buoyant than it has been. I mean, let's be honest, Bitcoin's still up right now, I think about 200% in the year. So not a bad investment.
Totally. If people that just bought at the beginning of the year and held, I'm sure that they're doing much better than some other traditional investments. For you and your trading groups, Bitcoin was quite volatile if you were trading throughout the year. We saw lows of 3K, 14K, back to 6K, 10K. I think right now we're sitting around 7.5K. How did you fare with your trading groups, and were you satisfied with the results?
Yeah, I mean, you've always got to be satisfied with whatever you get, because it is what it is, and you can't dwell on it because it just affects you mentally. But yeah, we killed it. Had a really good run. I remember being in Noosa Heads, which is where I'm from, and I was down to the jetty, and I got a phone call from one of my apprentices saying, "Cobby, I've got a 98-1 trade on." Now, for traditional investors, that's a 98% multiple on your risk. So if your risk multiple is 1, then that means 98 times whatever that risk multiple of 1 is. So if it's 1%, that's a 98% return. So we did capture that run very, very well with a number of great trades. The way back down, there's been some great trades short too. I mean, Bitcoin Cash a couple of weeks back, I didn't get to take the trade because I was in either Singapore or Malta, so I don't trade when I travel, as I said before. But look, there's been some phenomenal opportunities, and that's the thing that I think a lot of people miss out on in this space, is that they don't spend the time to educate themselves on how to go short, how to manage risk, how to trade. Because as a trader, whether it goes up or down, this market goes up fast and it goes down just as fast. Whereas traditional markets, they tend to go up slow and they fall very fast. That's the reason I'm in this space, is because the volatility is insane. And if you know what you're doing, It's it makes average traders look fantastic, and it makes good trading meaning you don't need to take as many trades, less work.
Mm-hmm. Totally. And if you know what you're doing, then it makes it a lot easier. And you are educating a lot of people, and not only traveling around and doing educational sessions, but also you have an online course every day that you're planning. If people are interested in figuring out, what are your strategies, learning more from you, or getting involved in your group, what's the best way to reach out and find out more?
Look, the best way is to go to tradercobb.com, which you can see up on the screen there. Just put a .com on the end of that and you're good to go. Follow me on Twitter at TraderCobb, Facebook, same thing, and YouTube. But we've got free resources there, a huge amount of content that we put out. My whole thing is to get people empowered to understand what they're doing. We used simple checklist-based trading strategies. And I'll be honest, I didn't make them for you guys. I made them for me. And they happened to work really well. I had no objective of getting into the business that I'm in right now and to educate people. I got frustrated with the lack of proper education out there by real traders with real credibility. Go and have a look at who I've worked with. And that's where we're at now, as we've got Trader Cobb there. And it's all online courses, lifetime memberships. And just go and have a look at what you see. If you like what you see, get involved. If not, there's some free stuff there for you. Maybe you'll learn something anyway.
That's great. I'll leave the links to that in the description box below, Craig. And thank you so much for taking the time. It's been a pleasure speaking and catching up with you again. And let's follow up again in the near future.
Sounds good, Ashton, mate. Well done. You're doing fantastic things, and I look forward to speaking soon. Thanks, buddy.